So welcome, guys. Welcome, welcome, welcome. Today, everybody in the Forex industry, in the Forex trading industry is actually looking at the best way they can trade and take their profits to maximize profit, and also the best way they can go about to minimize their risks. That is about setting their stop loss. And that is why today I want to show you how you can maximize profits and minimize your risks, because in every business you should be looking at these two factors: how you can maximize profit and minimize risks. And it's unfortunate that so many people in the Forex market don't know how to maximize their profits and also how to minimize their risks. My name is Charles Marcel. I'm the host of the daily online seminar where we meet every day, Monday through Sunday by 9 p.m. That is GMT +1. We'll meet and we'll share valuable information just like we'll be doing today. So I would like you to stay. But for the next few minutes, I'll be taking you through a sweet ride where we'll be sharing vital information about the Forex market. And today, let me take you straight to my screen and show you a topic. You might have seen it, what we'll be discussing today, and it's nothing but how to set your take profit and stop loss levels on the Forex market. Understanding what is take profit and what is stop loss. So when you know what is take profit, you know what is stop loss, and you know how to maximize this thing for your own use, for your own good, then you'll be profitable on the Forex market always, anytime you trade. Now, this is it. Each time you trade Forex, yes, there are days you have winning trades. There are days you have lose trade. But one thing I want you to understand is that your lose trade, your winning trades, when you do the plus minus in a whole month, you should be on the positive side every blessed month. You need to know what you're doing for you to actually be on the profitable side. And that is why today I want to show you all you need to know about take profit and stop loss. I've come to realize that so many people don't really know how to calculate their take profit, don't know how to calculate their stop loss. Some people don't even know that it is there for their own sake. And some people have ignored it over the years, where you're doing yourself more harm than good, not using your take profit and stop loss parameters that the Forex platform have actually set for you on the platform. And that is why today I'll be explaining to you what you need to understand about the take profit and the stop loss. For getting to Forex market, there are things you need to understand. Let me show you my screen. Let me show you my screen. Now, this is the Forex market platform, the Mt4 platform. For you to trade the Forex market, you actually need the Mt4 platform. And this is the Mt4 platform you're actually seeing as we speak. For you to see it very well, put your phone on landscape. What I mean landscape, put your phone like this. Landscape, don't put it straight like this. Put your phone on landscape so that you'll be able to see it very, very clear. Good. After doing that, you'll see the screen, that the screen is very clear, and you can see everything bigger, brighter. The Mt4 platform is where we trade the Forex market, and there are parameters that have been set in place for you to actually set your take profit and your stop loss. Maybe you was hearing about take profit, which is TP, and your stop loss, which is SL. And you'll be wondering, how do you really use them? First of all, let me explain to you what is take profit and what is stop loss. Number one, take profit. In a layman's understanding of language, let me just take it straight to you. Take profit actually means the amount of profit you are ready and willing to take in a particular trade at a particular time. Take profit, which is TP, actually means the amount of profit you're willing and ready to take in a particular trade at a particular time. So each time you trade in the Forex market, you use the take profit parameters, you set it and walk away. And the good thing about the take profit is that you are giving a command. It's an instruction. It's a standing instruction, an order that you have placed to say that I'm in the market currently. If price move to this level of profit for me, I am okay. I am comfortable. Get me out of the market. That is what take profit actually means. That when prices get to a particular level, to a particular point, so you got in at 250 and they got to 300, you're telling the market, you're telling the broker that get me out of the market at this point. Even from 250, get to 300, get to 400, 500, I'm not interested. But once it gets to from 250 to 300, please take me out of the market. I am comfortable with this amount of profit. That is the standing order instruction you are issuing to the Forex broker. And exactly that is what the broker will do. That once the price gets to that point that you have set, once it hits that level, it actually takes you out of the market and keep that profit for you. So even if price keep going up from that 250 to 300 to 350 to 330 to 800, you are actually out of the market. You have taken your level of profit that you feel is comfortable for you in that trade at that time. That is why take profit, like I said, is being defined as the amount of profit you're willing to take in a particular trade at a particular time. And the good thing about the take profit is that when you set it, it actually helps you to checkmate your greed and some other factors, market reversals and all of that. It helps you to be on the safe side so that even while you are not there, you just set the command in 1 second, you set the command and you are out of the market and you can go about doing any other thing you like. So that is it about the take profit. Now the stop loss, which is SL, stop loss, actually means as SL, that is stop loss. Now let me explain stop loss. It's just the reverse, the opposite of take profit. Now, stop loss means it is the amount of risks or loss you are willing and ready to accept in a particular trade at a particular time. It is the amount of risks or loss you're willing to take in a particular trade at a particular time. You need to realize that in every business, there are risks in every business. There is no business under the surface of the sun that does not have risks. So what you are telling your broker that I want to go out of the market, I want to go away, but I want to leave a standing instruction that once price, I'm getting into this market at 250 with my prediction that this price will get up to like 300. That's why I'm putting my take profit up at 300. And when you hit 300 take profit, give me that 50 point profit, I'm okay. But peradventure, my analysis is wrong. Peradventure, whatever is happening in the market, instead from 250 is ought to be going up, but it starts reversing downwards. Then when it gets from 200, it gets to like 170. Please get me out of the market, kick me out of the market at 170. I am willing to take a 30 points loss. I'm willing to risk 30 points. So once it gets down to minus 30, that's from 200 or from 250, let's say from 200, and it's coming down to 200, 190, 180, 175. Please, when you get to 170, cut me off. It's your decision for you to set it actually. You, the trader, you decide at what point you want to set your take profit or your stop loss. But one thing you need to know, you don't set your stop loss close to your entry point. No, you don't. Because you give a chance, you give allowance for market vibration. You need for market range, you need to give vibration. Well, from your technical and fundamental analysis, you should know where your stop loss and take profit should actually be. You know, you should, most of the time, we'll put it below a support or a resistance. We'll put our take profit there, our stop loss there, below the support, so that you can actually give the market a breathing space to actually hit your market and start reversing to your take profits. So the stop loss, basically, like I said, is the amount of loss or risks you're willing to accept in a particular trade at a particular time. So that is that. So the good thing with take profit and stop loss is that once you set these parameters in place, you can shut down your computer, you can off your phone and get busy doing other things. And after some hours when you come back, one of them would have executed. Is either it has hit your take profit or it has hit your stop loss. So that is the beauty about take profit and stop loss. You set it, you walk away, and it does not take you 30 seconds to set your take profit and your stop loss. You go ahead and set. I'll be showing an example how to actually set your take profit and your stop loss. And when you see it on your own, you can actually set it just following the instruction I gave. Don't forget, I said your take profit level and your stop loss level is all up to you, or from the market analysis you have done. So don't forget this daily online seminar. We'll meet every day, Monday through Sunday by 9 p.m. GMT+1. Please go ahead, click the subscribe button and also the notification bell so that whenever I'm live like this, you will get notified. So I will be showing you my screen, and I will show you how to set your take profit and your stop loss. So let's go ahead and let me show you how to set your take profit and stop loss. Now, this is the MT4 platform. I'm using my laptop. I'm showing you this. It's basically the same thing on your phone. Basically the same thing on your phone. So this is it. Let's assume we want to do this trade. Let me show you something. Oh no. There. I want to show you something. Okay. Now let's assume you want to trade. You have a signal. Say you got a signal, or you do your market analysis, and you have this thing. You want to enter the market Euro USD, and you want to your take profits is at this level. The current market price is here, and the stop loss is at this level. SL stop loss is here. Take profits TP is here. Now, from this analysis, this is the entry market point, instant execution. You are doing an instant execution. We have instant execution and pending orders. These are the two market orders you can do, either a pending order or an instant execution. Instant execution actually means you are entering the market that same time at that same price. While pending orders, you from your analysis and from what you have seen, you have seen a better entry point at a future price, either higher or lower. But now we want to do instant execution. And you have this. When you get a signal, many of times, the Forex signal, many of times is like this. Like this Euro USD buy. Now let's go and let's want to do instant execution with the take profit at 50 points, stop loss at 30 points. This is just an example, so take note of that. This is our Mt4 platform. There are two ways. If you're using the laptop, there are two ways you can go about that. Number one, you come to tools. Come to tools. You can see tools here. Follow my cursor. Click tools. You see new order. Click new order. And this order page will pop out. Or let me cancel this. Or you come to here. Look at the different Forex, the currency pairs, Euro USD, GBP USD, USD CHF, USD JPY, and the rest of them like that. Now, if you want to do a Euro USD, just double click on it. I'll double click and see what will happen. I just did that and see. It pop out, the order pop out. Now you can see the first symbol. The symbol is what Euro USD you want to trade. You can change it here in case you want to change to any other currency. You want to do AUD USD. You want to do any other one. Just click or USD CAD, whatever you want to trade, just click it and it will double click it and it will show up here. So look at the type of orders I'm talking about. We have instant execution and we have pending order. Like I said, instant execution are the kind of orders that you want to enter the market at the current market price, while pending orders are that you want to enter in a future date. But once you enter the market at the current market price, instant execution. Now you can see these figures are changing because I'm live online. So look at the current market price. It keeps fluctuating up, down, up, down. If you look at it, you see it keeps fluctuating up, down, up, down. That is how it works, because people are trading, people are buying, people are selling. So once people are buying, people are selling, prices keep doing like this, fluctuating up, down. Now, volume. We have chosen the symbol. We have chosen the type. It's instant execution. I want to do the volume. The volume actually means your lot size, the volume of trade. Now, the volume of trade, there's a video on my YouTube channel that I want you to watch. I actually did a video specifically for this, about the volume. So you understand the volume, how to trade, how to use leverages and lot size. So, but if you have below $300, from $300 and below, I will encourage you, always use 0.01 to trade. Your lot size here, the volume here should be 0.01. That's what you should use, actually. From $300 and below. Maybe from $500, you can do 0.03. Care about 0.03. Yeah, from $500, 0.03, 0.05 is okay. Maximum 0.05 from $500. So from 300 below, you can do 0.03. Although, depending on some currencies, actually, some currency, yep. But for this Euro USD, the 5 majors, you use this. So when you come to now, you can see stop loss, you can see take profits, you see comments, forget about comments, you see deviation. When you click it, see some numbers, forget about it. For your deviation, for your comment, forget about it. You can write whatever, you can write anything you write here, well, it's just for your own use. Now look at the current market price, you see it fluctuating. When you want to place a buy order, you click here. You want to place a sell order, you click here. You can see sell, you can see buy. What we want to do here now is that we want to place an order, this order that says we want to set our take profit point at 50, our stop loss at 30, and it's a buy order we want to do on Euro USD. Now look at it. Take profit is 50, stop loss is 30. Now when you want take profit is actually always in a buy order, because like don't forget I said a buy order is what a buy order actually means. You're buying at a current price and you want to sell it up when it goes higher. When price go higher, you sell it off. So that is what you want to do. So you are buying at this point. So you're saying if price goes higher with additional 50 points, you want to sell off. Now look at what the current market price is at 1.1293. Now these prices will be fluctuating. Don't bother your head about it. Just choose at 1 point and work with it. 1.1293. Now this last one you see is fluctuating. This one is 0 now. You can see it keep fluctuating up and down. Don't bother your head about it. It's part of the spread. It's a spread. Don't bother your head about it. Just focus on this 3. Just focus on this 3. This 1, 2, 3, 4. This 4, just focus on this 4 digits and forget about this last one that is changing sporadically very fast. So we're going to do, see that, don't forget, as a take profit is that you want to, because you're buying. When you're buying, your take profit is up. When you're selling, your take profit is down. Always have that at the back of your mind. When you're buying, your take profit is up, your stop loss is down. Whenever you're placing a buy order, your take profit is up, your stop loss is down. Whenever you're placing a sell order, your take profit is down, your stop loss is up. Have that. I'm going to practicalize it for you to see today. So look at it. We want to buy now Euro USD. We want to buy this current market price 1.1290. We're going to use 90. So when it fluctuates, forget about it. So we said it's 50 points. Abi? Yeah, take profit, we say 50 points. So don't forget. So we're going to add 50 to this. When you add 50 to 1.1290, you're going to give us you're going to type, you can do the calculation outside, or you just come here and type it and do that. And when you see this arrow up, this arrow down, when you click the arrow up, it will show you, click the arrow down, it will go down. When you click arrow up, the figures will go. You can see it's 0, 0 here, but when I click here, figures will appear. Let me do that. You see what I just said? The figures will appear. Now, when you do add 50 to 1.1290, that will be 1290 times 50 to 1340. So you can type it on your own. When you're going to 1340. So when you do the, so that's what you're going to be going to 1340. Then don't forget the stop loss is what? How many points? 30 points. We'll come here. I'm going to put, don't forget I said when you're buying, when you're placing the buy order, your take profit will be up above the current market price, and your stop loss will be down below the current market price. So don't forget, I said, forget this last number that is moving sporadically, is a spread. We're not going to look at it. So at 1.291 minus 30 points, you're going to be 91 minus 30 will be 61. Click down here. Look at stop loss. So we're going to set stop loss here. We already said take profit. We're going to set stop loss. So you're going to be 126 is what now? 63. So good. Is this 63 or 30? So don't forget. So if you look at it, this is 30 points below this, and this is 50 points above this. So we're doing our calculation for take profit from here. We're doing our calculation for stop loss from here, because we want to buy. So you go ahead and click buy. If you go and click sell, you see what you should. Let me click sell and you see. Can you see what you just showed? Invalid stop loss or take profit, invalid SL or TP. So we say, okay, Don't forget, this order is meant to be for buy, not sell. So when you click buy, you see what I said? Want to do buy, sorry. It's buy you want to do. 139. We do buy. I think my network is poor. Okay. 1, 2, sorry. This 1, 2 is my mistake at 90. Okay, it's me that did a mistake. So I click buy. I did mistake on the stop loss side. So this is a 1260 because when you start, so you click buy. You can see instantly went. You can tell me my instant buy 0.01 at this price is done. So okay, it's going to reflect here. You see it here. It's going to reflect here. It's a buy order I did. Look at the time I entered the market. Look at my ticket number. Look at the volume, the lot size. At this market price I entered. This is you can see my stop loss level I set, my take profit level. So now the good thing about this is the current market price. This I'm making profit or loss. It's showing I'm making some profit. Now, what this actually means, I can shut down my computer, shut down my internet, and go to work, go to my business, go and do any other thing, and the market will take care of itself. As simple as that. Whether if it hits the take profit, I made some 50 points profit. It hits my stop loss, I lost that trade with 30 points. So the good thing about it is that if my analysis did not work well, if it hit my stop loss, at least my risk is minimized. It's highly minimized. I don't have to lose much. I hope you get that. I won't lose much. And my profit is also set that I make the amount of profit I already set for myself. So that is for when you're placing a buy order. Now we're going to look at another condition. You have a signal, you want to do a sell order. We just finished doing the buy order. We're going to look at the sell order. I hope you get what I'm doing. You can always pause this video and follow, and subsequent after this live video, you can actually pause it and watch it later and follow it step by step to also practicalize it. Same thing on your phone, or you're using your computer. If you're using your phone, just tap on the currency you want to trade, on the currency pair you want to trade, and the order page will come out for you to fix in your take profit and your stop loss. So we're going to come here to our Mt4 trading platform. So once you GBP USD, is it? I'm going to see GBP USD here. So I'm going to double click on it. So the order page will come up. You can see the order page is up. I click it. I double click the currency here, or I'll come through tools here. Tools, new order. Once I click a new order, this will pop out. So that's how it works. Good. So don't forget, your take profit is always, even though it's on your phone, they might not write the take profit and the stop loss. Don't know where the figures here are for take profit. The figures here by your left-hand side are for your stop loss. The figures here by your right-hand side are for your take profit. So always have that in mind. So we want to place a sell order. You put in the take profit and the stop loss. Now, the take profit is 40 points. The stop loss is 25 points. Instant execution likewise. Don't forget I said, when you're placing a sell order, let me start from a buy order. When you're placing a buy order, your take profit would be above this current market price, and your stop loss will be below this current market price if you're placing a buy order. But when you're placing a sell order, it reverses. Your take profit will be below this current market price, and your stop loss will be above this current market price. That's why in the first order we placed, you saw that our take profit, when we were setting our take profit where it was 50 points above that current market price, while the stop loss was 30 points below the current market price. That is for buy. And now we want to place a sell order, this sell order that they said the take profit should be 40 points and the stop loss should be 25 points. So this time around, the take profit is going to be 40 points below the current market price, and the stop loss is going to be 25 points above the current market price. Have that at the back of your mind. So that's what I'm going to do. Hope you get in this. Good. So it's GBP USD we're going to trade. It's also instant execution. The volume should be 0.01, depending on how much you actually have in your account. You have up to $1,000. in your account, you can do 0.1, you can do 0.1. You type it yourself. You can type it yourself. So you type it. After you say I've canceled everything, I type 0.10. If you have $1,000, you can do this. All is to help you checkmate your loss and also help you to make some good profit, not to expose yourself to too much risks actually. But because now we're going to do, I'm doing, so don't forget that. So you're going to do 0.10 that I'm using this, okay. 0.10. Okay, good. So now I want to place a sell order at take profit 40, stop loss 25. So if you do, you're going to do minus 40 here. You're going to do, yeah, minus 40 here. 1.3207. 3207 minus 40 will give us what? 607. 1.316. That should be 160. 1607. Yeah. Let me type it. You can type it yourself. 167. Yeah. That's 40 pips. Why stop loss? You add 25 to this number here. You add 25 to 3207. I'm going to use 25. I will add 32. I'll be like 32. 232. So don't forget, I told you to forget about this last figure. I see changes sporadically. Forget about the spread. Forget about it. Don't work with it. You see, like this order is now. If I go ahead and click buy, it will not go. Show me invalid because I've not set the parameters right. But I'm going to click sell because we want to sell. You can see the take profit is below this current market price, 40 pips below here, and the stop loss is 25 pips above this market price. So that's how you set the parameters for take profit and stop loss. Just take your time, practice it, you'll get it. So I'm going to click sell. Instantly, the broker accepts my order. I'm in the market already. I say, okay, you're going to come down, you're going to see it here. Look at it. It's a GBP USD trade. This is the time I entered the trade. It's a sell order. The first one was a buy order. Why this one now is a sell order? Look at it. I entered at the volume, the lot size. You see my stop loss, see my take profit. Look at what is happening in the market now. So that is how with this now I can walk away and go to anywhere I want to go. The market takes care of itself. It will hit either the take profit or the stop loss. As long as if my analysis is so correct, it will hit my take profit. If my analysis is wrong, it will hit my stop loss. The beauty of this is that I've checkmate the market. I've already put parameters in place to help me make profit or to minimize help me make profit by hitting my take profit or minimizing my loss by hitting my stop loss. Because if the market go haywire and I'm not there, I'm doing other things, it will hit my analysis is wrong, it will hit my stop loss. And I only have to risk a little, risk a little so I can come another day, do my analysis and make some good money for myself. So that's the beauty about the Forex market. And this is how you trade the take profit and the stop loss. This is actually how you set your take profit and your stop loss. I believe you actually understood everything I'm saying. In case you have a question, click the button below the comment. On the comment box, please drop your questions. I'll be willing and ready to answer your question. You think you need more support? Why not send me a message inbox and I'll contact you. I will reply to your messages and we can take it over for there. I still remain Charles Marcel, the host of the daily online seminar. We'll meet every day, Monday through Sunday by 9 p.m. GMT+1. Don't forget to like this video and also subscribe to this channel.